Welcome back. Time for Business with William Edwards. Hello, William. Now, the G20 summit in Mexico wrapped up yesterday, Tuesday. What did the leaders agree to?
Well, of course, the Eurozone crisis was at the top of the agenda and leaders were making all the right noises. Not much was actually agreed to. They did say they'd take all necessary measures to protect the euro area, and they did back a lot of big measures. We'll see perhaps more on that next week. But the most tangible results were related to funding of the IMF by more emerging economies, something that may have political consequences further down the line, as Olivia Salazar-Winspear explains.
They might have been on the Pacific shores of Los Cabos, but for this G20 meet, the focus was firmly on Brussels. French President François Hollande was pushing growth in the Eurozone as opposed to austerity, a position he's held firm on. And this time there was a shift in his favour, as other leaders agreed it was necessary to kickstart sluggish economies.
We're determined to solve this crisis, and we want to do so by using a combination of fiscal consolidation, growth initiatives, and stronger European teamwork. We need more Europe, and we also need to work together.
Merkel's been under increasing pressure to ease borrowing costs for Spain. She could agree to Madrid using the European Stability Mechanism for a debt buyout. IMF chief Christine Lagarde was optimistic about what she called a pan-European recovery. And she had reason to be cheerful. Her institution will receive a boost in funding from developing countries.
We've secured an increase in resources for the IMF, not just $430 billion as we'd planned, but $450 billion. With that, we have doubled the historical capacity of the International Fund to support and loan.
A hefty contribution to the fund from the so-called BRIC countries, who've so far been snubbed by the IMF when it comes to leadership and influence. This cash injection could see economies like Brazil and China having more of a say in the workings of the monetary fund in the future. EU leaders are to meet again next week at a summit where more complex plans for the future of the Eurozone will be drawn up.
Big smiles all round. How are the markets reacting, though?
Well, Asian markets are actually on a bit of a roll at the moment, broadly. That follows good sessions in both the US and in Europe. This is on hopes that the Federal Reserve in the United States will extend its action on the bond markets to try and keep interest rates down, known as Operation Twist. We should know about that later on today. Also, good news from Japan. Exports were up by 10% in May, its biggest rise in 17 months.
Still some dark clouds on the horizon, though, when it comes to the Eurozone.
Yeah, despite all this market rally that we've been seeing over the last couple of days, of course, Spain's borrowing is still very much a worry. Let's take a look at their rates for 18-month bonds that they sold yesterday at auction. You can see there the rate in June, 5.1%, quite a long way up from the 3.3% they sold for in May. This is, of course, after that 100 billion euro banking bailout, which Spain had to accept a few weeks ago. And of course, due to EU rules, the money has to go via the Spanish government, thus adding to its debt pile rather than going straight to the banks. So that really has added up to the worry over Spain.
Next, fresh off the back of a strong showing in parliamentary elections, France's socialist government has announced plans to tax dividends paid out by companies to their shareholders. The move has been criticised by business leaders, while UK Prime Minister David Cameron has also been taking shots at French tax policy.
The candidate's campaign promises are now, thanks to the socialists' strong electoral victory, becoming the president's first steps. As early as this summer, François Hollande's government is ready to roll out a new tax, a 3% levy on share dividends. The aim is to raise 800 million euros, as well as incite companies to reinvest their profits. But for France's employers' union, now is not the time to hamstring an already moribund sector.
Be careful not to transform our country into some kind of enclave that's so rigid that it's completely disconnected from the market economy.
The 3% levy will weigh not on the shareholders but on the companies, and it could be music to the ears of David Cameron. The British Prime Minister has already said his country would roll out the red carpet to French companies fleeing high taxes, an intervention that drew an angry response from François Hollande's team.
It's absolutely inappropriate for a foreign leader to get involved in domestic affairs. I would say that a European Union where member states compete with each other by fiscal or social dumping, well, it's not good.
Private shareholders, the ones rewarded by the dividends, remain businesses' principal investors. France's top 40 companies paid out almost 40 billion euros last year. Big business will be watching François Hollande's next move closely.
Let's move on to some news in brief now. US regulators have criticised the City of London, saying risky trading there could put the US economy at risk. This comes after JP Morgan Chase made a $2 billion loss on a trade that originated in its London office.
Ryanair is making its third attempt to buy Aer Lingus. The low-cost carrier has offered nearly 700 million euros for its Irish rival, but its two previous bids for the company have been blocked by competition regulators.
And 45% of UK pharmacy chain Boots has been bought by US giant Walgreens, in a move that will create the world's largest buyer of prescription drugs. The two companies are hoping to go through with a full merger in 3 years' time.
Big fan of Boots. Just thought I'd mention that in passing. Now, back here in France, worries about the future for workers at one of Peugeot's factories.
And that's right, yeah. Aulnay-sous-Bois is the name of the factory. 3,600 jobs at risk there. The mayor of the town is saying that could be closed as soon as the end of July. Another headache, of course, for François Hollande, who is battling on many fronts to keep job losses from rising across France.
But Peugeot's got a bit of a cunning plan to fix its financial problems.
Yeah, well, I'm not sure this is going to save the company, but they are apparently, they've confirmed that they're considering selling their corporate jet. The aging
Can't imagine
Falcon
it's worth
50.
that much.
Well, exactly. I mean, it does date from 1984 as well, this jet. So I can't, like I say, I don't think it's going to save the company. But it is part of a wider 1.5 billion euro asset sell-off. So hopefully that will at least go some way to restoring Peugeot's fortunes.
Okay, thank you very much, William. That's it for business. Thanks very much for watching live from Paris. Do stay tuned to France 24.